Deven Choksey, Managing Director of Choksey Securities, joins us. Deven, straight off, let's talk stocks because the index honestly is doing precious little. Yesterday, we saw a powerful move in NBFCs. Dewan Housing Finance, we saw price action in Mahindra and Mahindra Finance along with Bajaj Finance. What do you like from the NBFC space and why suddenly NBFC stocks have regained a lot of momentum?
Yeah, good morning, Nikunj. Well, I think the NBFCs probably have started moving up, and what we have seen, I think the couple of stocks like IDFCs or LIC Housing Finance, I think where they are trading at a closer to the book value valuation. So from a perspective of buying a company which is available at a price, I think which is far more comfortable and has a higher amount of upside, I think that's where the market preferences started shifting. I'm not totally surprised that I think many of the NBFCs have started participating into this. We also saw, I think, some of the realty companies participating yesterday into the market, and also I think some of the mid-size, small-size firms in the capital goods segment. So generally, I think what one has started seeing a behavior of investors, that they have started taking some amount of risk in the market. They have started, I think, buying those ideas where the valuations are attractive, downside is limited, and probably, I think, much higher headroom to cover. And that's where I think you have seen the actions yesterday in the market. We will not be completely surprised if we see, I think, this action continuing over next 1 or 2 quarters, wherein I think some of the laggards or the beaten down valuations could probably catch up and a re-rating would start taking place in the market. And as you rightly said, I think the index would do precious little in this journey. Maybe I think individual stocks could possibly, I think, start showing a greater and a better performance going forward. So we are relatively more confident that the return of investors into the market would probably find takers in some of the beaten down valuations, and that's where you would probably see the likes of themes which may get changed from time to time, like NBFC to capital goods or others, but I think the fact remains that the beaten down valuations are being selected in the portfolio, and portfolios are being strengthened for the higher amount of appreciation that one is expecting out of these stocks in next few months.
Deven, hi, morning. So by that logic, would real estate as well be a pick with you?
Well, selectively, I think one cannot say that I think one would not like to buy it. Definitely, I think it's an opportunity in many select companies, I think, including some of the real estate companies. Of course, I think we'll have to go company by company in picking up your ideas. More importantly, because I think some of the managements or the promoters in the past have shown the appetite for higher amount of risk and the inorganic growth, the actions that they have taken. I think those promoters could be a little vulnerable to the portfolios, and probably I think they can damage the portfolio to an extent, I think, if the situation doesn't augur well for the economy in general. But otherwise, I think in many of the real estate companies, I think you see the opportunities available, like South Gujarat Property or a Shobha Developers from South or Mahindra Life Spaces. I think these are some of the business models which are asset-light models, and that's where I think you could possibly see the growth continuing in these companies. They may give relatively less appreciation, but at the same time, I think there would be solid stocks in the portfolio. So yes, I think some of these companies could be kept in the portfolio or held in the portfolio.
And what could be the next big trigger for Indian markets? The RBI policy has been done and dusted. For the moment, tapering concerns have taken a backseat. Economy has bottomed out, that is in the price, and current account deficit already is being controlled. So do you think somewhere this market now lacks any kind of a catalyst or a trigger which will generate upside momentum?
Well, Nikunj, I think the important most trigger could be, I think, the returning of the confidence into the system. Currently, I think people are skeptical. People are not very sure whether whatever the story which India holds would get unfolded. And that's where I think people are more, I think, worried about. If you see the return of confidence into the system, quite possible that I think many of those factors, I think, which are already seen discounted, could possibly, I think, lead to the growth in the economy. To my mind, I think the confidence could return back in the economy, starting with the political leadership. If the political leadership is allowed or it's installed in this country where the growth is being provided to the economy, then in such situation, I think the confidence will return back. And thereafter, following factors, including, I think, ease of inflation and others, I think, would start taking its lead and probably play a role in the market recovery. But important most, I think, one-line word, I think the return of confidence in the economy has to come, before which we see the newer highs or sustainable highs in the market.
jump in on Infosys. The street is divided on what the recent exits they mean for Infosys. Yes, the management clearly has outlined that, look, we have a strong management team in place, we have a lot of bandwidth, and we surely are in a position not to lose the business momentum. But the fact that we've seen 8 key level exits in last 3 months, that could be dangerous.
Yes, Nikunj, I think on the face of the numbers, I think certainly it may sound dangerous, and for sure I think one has to be careful about that particular aspect, I think when one holds the investment. But at the same time, let's understand one thing very clearly: the mandate given to an RN, and he took that particular mandate, probably I think was conveying that, okay, wherever the inefficiency or the non-performance is, I think that needs to be weeded out, and thereafter I think the company has to be brought back onto the growth track, and that's what I guess I think is happening in the company. Probably I think in immediate future you probably see I think those executives leaving the company where I think the performance was asked for, and that's where I think the company probably is seeing the exodus. To my mind, I think we'll have to wait and see as to what kind of model is getting unfolded in the process, and what kind of leaders are going to be installed in the process. I think that is something which one needs to, I think, wait and see what the actions are coming. But yes, I think I would also say that one needs to be a little bit more careful about this particular aspect, that whether the new level of leadership is emerging in this situation. If it does, then probably I think we could see Infosys on a higher growth track going forward. So one will have to wait and see actually to see the validation on this aspect.
Why is Tata Motors now underperforming Indian markets? It's a bull market stock. Market conditions and market internals are charged up. The outlook for auto only has improved. Global demand for JLR only has improved, but the stock demand has certainly plunged.
Well, yes, Nikunj, I think all the fundamental factors are certainly positive, and on the contrary, I think the government's move to basically promote the new trucks vis-a-vis the older trucks, I think by giving the cash incentives, I think that in itself I think is very positive for the commercial vehicle segment in general. According to me, I think the revival in the economic demand, and along with the fall in the interest rate eventually, I think at some point of time, I think would certainly mean that the growth returning back to the commercial vehicle segment, and that should call for a case for having this company seen strong also from the domestic market point of view, apart from seeing a JLR portfolio which is growing robust. The very reason for which I think the stock right now I think is that not being attracting investors is, to what I understand is that many of the investors, the large size investors, have already built up the portfolio and they're waiting for the fresh funds to come. Probably after that, once again I think you might see the stock returning back into the favor and probably buying in the portfolio. As of now, I believe that the valuation wise the stock is comfortably placed and it's a buy opportunity at current levels. So I think if it is available at this level, one should accumulate for a next 9 months to 12 months price target of somewhere around 440 from current levels.
Deven, what's the sense that you're getting about United Spirits, and does it seem like the Karnataka HC order could be a big overhang on the stock?
And certainly wherever I think we have seen the uncertainties coming in, I think they probably drag the market mood, sentiments, and I think the actions of the players. Not very sure as to I think how exactly it is going to go in which direction, but certainly believe that I think if this particular order is around, then probably we are likely to see I think a drag I think for longer period of time. So I would say that I think as far as the market actions are concerned, I think one should safely book profits if one has been lucky in buying this particular stock earlier, and probably I think take money off the table and invest somewhere else.
So Deven, if you have to chart the market, let's say from 1st of Jan to middle of May, which group do you think has potential to outperform Indian markets? Would you bet on cyclicals? Would you bet on exporters? Or would you bet on pure consumption plays?
Nikunj, I think it probably will have to be I think mix of all I guess, and the approach would be very clear that in individual sectors within those respective I think themes, cyclical certainly I think holds the what you call preference above everybody else. More importantly from the point of view that the valuation wise many of the cyclical stocks are available at a comparatively cheaper valuation, and if the economy is returning back to growth, which in all likelihood it will, then in such situation probably cyclicals would probably take the lead in the entire space. That doesn't say that I think the others would not perform, but relatively I think the cyclicals could outperform in this kind of a market. We believe that I think many of the banking companies could possibly take lead. Many of the auto companies likes of Maruti, Tata Motors, Bajaj Auto, I think they could probably take lead. And I think we also believe that I think within the capital goods segment, particularly I think those who are the ancillaries to the power sector, they could possibly, I think, once again come back into reckoning. So to a greater extent, I think you would find selective stocks within different pockets would get re-rated in this marketplace, of course driven by some of the positives on the fundamental side.
They've been good chatting with you. Really appreciate you taking the time out and speaking with us.